Hello, everybody, and welcome to the APAC-SCA Member Spotlight Series, where we sit down with leaders shaping the future of cell ag across the Asia Pacific and beyond. So, in this episode, we are very, very delighted to be joined by Didier Toubia, who is the CEO and co-founder of Aleph Farms. Didier has been, at the forefront of cultivated meat innovation, leading the company's efforts to really develop sustainable, high-quality cultivated beef while navigating the pathway towards commercialization. So in today's session, we'll discuss Aleph Farms' journey and the latest industry development, as well as Didier's perspective on what lies ahead for cultivated meat. And with that, welcome, Didier.
Thank you, Peter. Have a good morning. I don't know whether this will be kind of podcasted in the morning or the afternoon, but happy to be with you here. Thanks for having me.
We're always happy to have you as well, Didier. And so let's go right into the question. So maybe we start with an introduction, but looking back a little bit, so Aleph Farm has been one of the defining companies in the cultivated meat since the industry's very early days. And if you look back over that journey, what would you say has been the biggest transformation, not only for Aleph Farms, but the industry itself?
Yeah. Yeah, I think it's a good question because we've seen, the ups and downs of the industry, which are overall quite a classic, hype cycle for any new innovation. We've seen also other new technologies going through similar cycles of, initial, hype and, super high expectations, and sometimes some companies over-promising and a lot of money flowing into the space, funding anything at any valuation. And then, phase of recalibration where, companies with a real business model, real products, focusing on the fundamentals, like how to build a real business and build a short path to profitability, are the companies which emerge as eventually the pioneers and the leaders of this new category. And that's what we've seen with clean tech at the time in early year 2000s, where there was a hype around clean tech, and at the end of the day, it took maybe 5, 7, 10 years to see the companies with which really emerged as the growth companies which dominated the category. We've seen that with the internet at the end of the 90s, with the dot-com bubble, which burst in years 2000, and Nasdaq went down 70% at the time, which is something difficult to kind of imagine in today's world. And the leaders of the category, like Microsoft, Google, Amazon, emerged from actually this the birth of the dot-com bubble as trillion-dollar companies, just because they were able to evolve and really focus on being real companies making profit with a real product and a real business model, while a lot of dot-com companies did not have any real business model and no way to really make profit. And that's also what we're seeing now with AI. In the last couple of years, investors invest in anything AI, obviously on very high valuations, and companies which don't necessarily always have a very kind of disciplined business model and management. And I believe we will also see some type of recalibration in AI. That's what we've seen in with alternative proteins in general and cultivated meat in particular. In 2020, 2021, we've seen a lot of investments, a lot of money flowing into the space, funding anything. And I believe that, as an healthy correction, we've seen, some type of recalibration of valuations. Companies like Aleph Farms really making sure that they build the foundations right for leading the category in the long term, as opposed to just storytelling. Refocusing on cost reduction, on the right product and positioning, on the right business model, right partnerships, focusing on de-risking the regulation, building commercial partnerships to de-risk the scale up. And I think that those companies will, same as, obviously I hope Aleph Farms are the ones which will become trillion-dollar companies eventually and lead the category. That looks from the outside like an roller coaster type of thing. But I think that the goal of managers like me and investors in the space is really to manage this cycle, to be aware of it, and to manage it in the smartest possible way. That's what we're trying to do. And I think that smart investors, sophisticated investors, are actually coming back to the space right now and understand that it is the right moment to be part of this recovery and this build up of this category with the better companies really achieving very good positions.
Yeah, and that's very reassuring to hear. And going into more about Aleph Farms specifically, so recently we've seen sort of Aleph Farms placing significant emphasis on simplifying production, reducing costs, and demonstrating commercial viability. So, how has the company's strategy evolved from proving the science to building a scalable business? But also, many people still ask about cultivated meat. Can it become economically competitive? So, what give you the confidence that we're moving towards that reality?
Yeah, sure. First, Aleph Farms is a quite unique technology. As we do focus on beef sales, we're currently the only company globally which is cleared for marketing a cultivated beef product. We believe that beef is really the place to go and the place to be for cultivated meat because it's more premium type of meat, providing much more flexibility in terms of pricing, positioning. There are many types of beef cuts. Chicken is just chicken. I mean, again, I don't want to sound negative about chicken, but I think that beef is a large market, is away from high-end niche products, but still higher end and provides much more flexibility in terms of go-to-market strategy. We're dealing with non-modified cells, pluripotent cells, which are not GMO, not immortalized. We're the only company, to the best of my knowledge, which has the technology to make cuts like whole pieces of meat with the texture which is matching or even beating the texture of conventional beef cuts. And we're really focusing on building the right business model and a short path to profitability. On one hand, with an asset-light approach, very capital efficient, which is kind of some type of pivot we've done in the last few years, starting end of 22 and during the course of 23. Today, we have a very strong production partners in Europe and in Asia. We have actually done a lot of work on optimizing, as you mentioned, the production cost, optimizing the yield, but also simplifying the equipment, shortening the production time, optimizing the growth medium for cost and yield. We completed a technical economic analysis last year with an external engineering firm. I think Aleph Farms, to the best of my knowledge, is the only company in the industry which has performed a technical economic analysis with an independent engineering firm, not with an academic institution and not an internal analysis, showing that at price parity with conventional beef, we can reach 50% margins. So we really overcame the challenges of cost efficiencies and capital efficiencies, which were big challenges 3 years back. And I think that for many investors, it's difficult to kind of adjust their mindset and understand that those challenges have been overcome. Many players in the space remain kind of still kind of blocked with the preconceived ideas of those changes as they were 3 years ago. The industry did make a lot of progress there, and I think that we're past those changes today. And that's very important because, as I said before, we're really in a stage where after the kind of high expectations which we had a few years ago, we really need to deliver now. So I think that Aleph Farms, same as other companies, is really focused on delivering real business, real product, profitable, sustainable business with a reduced risk, and that's where we stand today.
Thank you, Didier. A little bit about the product itself. Ultimately, consumers they don't buy the tech, but they buy the
Mhm.
food. So Aleph Farms, as you prepare for commercialization, what excites you the most about your product and the consumers that, what kind of experience will they have?
Yeah, I think it's a very good point because that's also something a lot of companies in the space took time to kind of really reflect is that don't think that we need to educate the market about cultivated meat. What is cultivated meat? What does it mean? I think at the end of the day, we need to make great products which meet the consumer preferences. Um, we need to sell it to the right consumers at the right price. If we get the product right, people will buy it. The technology does not really matter. People don't know what is extrusion, what is freeze dry, what is instant coffee is freeze dry. People don't know what is freeze dry. We don't need to educate people about freeze dry, but rather about the benefits of it, that the aroma is better and I don't know, whatever, the quality of the coffee is better. I think in our case, it's the same. We don't need to educate about cell culture. We just need to make sure that the product itself can deliver a unique value to the consumers. In our case at Aleph Farms, we're focusing a lot on the convergence between indulgence, meaning great taste, flavor, and our cells do provide a very high level of sensory properties, meaning taste and flavor, as compared, let's say, to plant-based alternatives. On the other hand, we also provide, and that's the second part of it, an optimized health and nutritional profile. We have optimized our product for having 60% less calories, 80% less cholesterol. We have a much better protein to calories ratio than conventional meat. The same amount of micronutrients like iron or vitamin B12. So really playing at this junction between indulgence and health. We do have some plans for getting deeper into the functional food angle. So we're not playing just on novelty. We don't want to be niche neither. Again, I think that the goal is really to analyze what consumers want, what conventional meat can't deliver as a value, and to focus on bringing this unique value, a large enough segment of the consumers want and is currently an unmet need and grow based on this unique value. So beyond that, we completed a blind test in January earlier this year with 60 participants, providing them both cut and sirloin. We have demonstrated that we beat actually sirloin on texture in terms of how much the consumers prefer our texture, meaning we're super tender. We're equivalent in terms of juiciness, in terms of chewiness, key quality parameters for meat. And the intent purchase is the same in the blind test. So the product itself is really good. And we intend not to compete in the market based on we're meat, we're not meat, but really on answering an unmet need with a unique set of attributes. And I think that's key. That's also what a lot of other companies understand in the market today. Also in the plant-based category, I think that the products are much better positioned. The price, the marketing is much more suited to really lead and to trigger more acceptance in the market. So again, focusing on the right product is key here, and that's what we're doing, same as other of the better companies in the space.
That's great. And moving into partnerships and in Asia specifically. So, Aleph Farms, you have developed partnership across multiple
Mhm.
regions, including Asia. So what role do these strategic partnerships play in accelerating commercialization, but also why Asia? And as a
Mhm.
follow-up question to that, are there any particular opportunities in Asia that you think investors and industry
Mhm.
may be underestimating?
Mhm. Yeah, 100%. Thanks for this question. Aleph Farm started in Israel, which is technically in Asia. even true in the western edge of Asia. So for us, Asia is actually kind of, the backyard of the company and part of our regional ecosystem. We have decided in the last year to really put a focus on moving a large part of the operations and the center of gravity of the company into Singapore. We've set up a legal entity at the beginning of this year and started working on setting up our local operations in Singapore. We're also working in parallel on setting up some production and operations in Switzerland. So currently, Singapore and Switzerland are our two key geographies, and we're kind of rebalancing a bit the way we're actually allocating our resources to internationalize the company a bit further. And from our standpoint, we do see the Asian ecosystem as the key. We've been active in Asia since 2018, of course, and we have key partnerships there. Besides having raised money from Clay Capital, which is based in Singapore, but also from other Asian entities, whereas from Temasek in 2021, small ticket at that time. But we have a very strong connection with the local Singapore ecosystem. We also have Thai Union as an investor and partner, CJ Foods in South Korea. We have published an MOU and term sheet with the Mitsubishi Corporation, with which we're working very closely on the Japanese regulation. As you know very well, we're one of the founding team members of the SCA APAC, also active in JACA and being actively involved in a few public-private initiatives in the region. So we've built a strong ecosystem in terms of financial ecosystem, industrial ecosystem, public-private ecosystem as well, including regulation. We've been active. We've been the first company to file any regulatory application in Thailand. I think we've been the first company at the time which was not Japanese, to take part in the CRS initiative in Japan at the time, 4 or 5 years ago, and since then active in together with our partner Mitsubishi Corporation in supporting the setup of the regulatory ecosystem in Japan. And we've seen in South Korea significant initiatives, also of course in Thailand, but also in China, in Malaysia. Indonesia is also starting to really get into the space. So a strong alignment between the industry and the policymakers in the region. And we believe that food is an ecosystem. Food is not a standalone product. So in order to be successful in driving a new category in food, we do need this ecosystem to support us as we're a startup, and we need actually the operational capabilities, the production capabilities, the access to the market. On the production front, we published this agreement with Cellular Agriculture earlier this year, which is for us a key partner based in Malaysia and Singapore. So we do actually really focus on where we're good at, meaning the best in-class technology, products, the best capabilities we have in terms of optimization of production processes, but we do not want to own the production units. We prefer relying on partners for the actual distribution. We don't want to deal with the cold supply chain and with moving boxes and with the last mile to reach our customers. So we rely on this ecosystem to de-risk the business opportunity and grow. Now, Asia is important beside that because of two key reasons. One, the market characteristic. It's of course a very large market, which is also open to food innovations with a strong focus on food safety and traceability, which we can really improve. And second, as we discussed before, Aleph Farms is focusing on beef, and Asia is not a beef producer. Asia is a geography where there's quite a lot of chicken production, little bit of seafood. I mean, depending which type, but not a beef producer. So most of the beef is imported, and there's a strong food security issue, which has been amplified in the last few years by repeat crises. You know, we've seen started with COVID 5 years ago. It sounds of 6 years ago. It sounds like a prehistory, but it's not that long ago. Well, we've seen a lot of restriction of imports and exports of food, including proteins. I was in Singapore when Malaysia stopped the exports of chicken to Singapore. But then we also had the African swine fever especially in Asia, which devastated the pork industry. We had last year the tariffs, which also impacted the trade of food as physical goods. We've seen recently the crisis in the food systems related to the war in Iran and the blockade of the Straits of Hormuz, impacting fertilizers and the whole food system. So for a region which depends almost 100% of imports of beef, I think that being able to diversify the supply chain and the type of products, animal protein products, and providing additional choices for animal proteins, same as cultivated meat products, is really key. So we've seen again in Asia strong momentum, and Aleph Farms is well positioned to be one of the few leaders of this category in Asia, which will represent 60% of the world population.
Thank you, Didier. So I think we're sort of running out of time, but I want to you touched upon this a lot throughout the talk, but I want to end on why Aleph Farm specifically, right? And you can bring everything together that you talked about. So for someone watching today, whether they are an investor, strategic partner, regulator, or future collaborator, why is this and why is today an exciting time to engage with Aleph Farms, and where do you hope Aleph Farms will be in 5 years from now?
Aleph Farms is laser sharp focused on leading this emerging category, which will be a multi-billion category. I think that Aleph Farms has been quite good at managing this hype cycle I mentioned at the beginning of this podcast, and really making sure that we focus on being capital efficient and asset light, de-risking the regulation, and promoting a very unique technology and products based on beef, whole cuts, natural cells, with a strong focus on health and nutrition, which is a mega trend, reducing our costs and making sure that we have a short path to profitability, and building the right partnerships, especially in Asia, both financial, industrial, public-private partnerships, production partnerships with the Cell Agritech. So I really believe that we have today all the pieces in place to really leverage our achievements and lead this new market category. And that's definitely, when I talked before about managing the cycle, that's exactly the point in time when we're ahead of breaking through the market and start growing acceptance for this type of products in Asia. So I would believe that independently to Aleph Farms, that is the right point in time to invest. I would like to put $100,000 on the Nasdaq in 2001 or 2002. After the burst of the bubble, before the Nasdaq recovered and went up thousands of percents again. That is actually the kind of the recess where investors need to invest. Investors who understand those cycles and are smart enough and sophisticated enough will make a lot of money investing now, 100%.
I fully agree with you, and I wish I had more money to invest as well. But thank you, Didier, for being with us. It's always a pleasure.
Thanks, Peter.
Thank you so much. And for anybody listening in, if you have any follow-up questions, do reach out to myself, and I will forward that to Didier and his team. Thank you, Didier, again.
Looking forward, and bon appétit.
Thanks.